Good morning. Welcome to the next topic, calculation of interest on capital. And one interesting doubt, why we are calculating interest on capital? What's the need for calculating interest on capital? So, let's discuss. We'll discuss all those things here. Listen here. We discussed earlier, in the absence of partnership deed, no interest is allowed on partner's capital. Clear that no interest is allowed on partner's capital unless it is expressly agreed among the partners. How expressly agreed? Through the partnership deed. If no such agreement, no right for getting interest on capital. When the deed specifically provides for it, interest on capital is credited to the partners at the agreed rate with reference to the time period for which the capital remained in business during a financial year. So, additional capital, withdrawals, that means drawings, etc. should consider here, and how many months that the capital remained in our business, calculate that time period, then calculate the interest as per agreed ratio, then credit that amount to partner's capital account. Interest on capital is generally provided for in two situations. Why we are giving interest on capital to the partners? Answer to that question. Two situations are there. First one, when the partners contribute unequal amount of capital but share profits equally. They are contributing unequal capital. That means X and Y are partners. X contributing 2 lakh, Y contributing 1 lakh rupees, or 2 lakh and 3 lakh rupees, X and Y, and sharing profits and loss equally. At that time, one partner feeling that it is injustice. So, for avoiding that one, we are giving interest on capital. Next one, we here means firm. As per the agreement, we are doing all those things and not on the basis of one opinion or nothing. It is purely on the basis of partnership deed. Who is preparing partnership deed? These partners only preparing the partnership deed. Next situation where the capital contribution is same. Capital contributing same but profit sharing is unequal. In these two situations, interest on capital is justified. So, how to calculate? When there are both addition and withdrawal of capital by a partners during a financial year, interest on capital is calculated as follows. First thing, on the opening balance of capital account of the partner, interest is calculated for the whole year. On the additional capital brought in any partner during the year, interest is calculated from the date of introduction of additional capital to the last day of the financial year. On the amount of capital withdrawn, other than usual drawings, during the year, interest for the period from the date of withdrawal to the last day of the financial year is calculated and deducted from the total of the interest calculated under points. Point 1 and 2 above. In these two cases, from where we are first introducing capital up to the last day, and when additional capital introduced from that day to the last day, calculating interest. Then withdrawal day, how much withdrawing from the firm, from the capital, that day to the last day, calculating and deducting that amount from the above first and second point calculated interest. Let's discuss one question. Saloni and Srishti are partners in a firm. Their capital accounts as on April 1st, 2016 showed a balance of rupees 2 lakh and 3 lakh respectively. On 1st July 2016, Saloni introduced additional capital of rupees 50,000 and Srishti rupees 60,000. On October 1st, Saloni withdrawn rupees 30,000 and on January 1st, 2017, Srishti withdraw rupees 50,000, 15,000 from their capitals. Interest is allowed at the rate of 8% per annum. Calculate interest payable on capital both the partners during the financial year 2016-17. So, how to calculate? I am discussing this question and I entered all those amount here. You have to solve this one without seeing this answer. First you go through this one, then solve the same problem you are on. Which method is convenient? Here I am discussing two methods. Which method is convenient to you? You can follow that method. So let's start. Saloni's capital interest on capital calculation. Capital account as on 1st April 2016. That means the outstanding balance or balance as on 1st April 2016. Here listen one more thing. April 1st starting our accounting year means ending date is 31st March 2017. That's a 12-month accounting period. Rupees 2 lakh. Additional capital on July 1st 2016 rupees 50,000. Drawing on October 1st rupees 30,000. Interest rate 8%. Interest calculate interest on capital up to July 1st. What is July 1st important? The importance of July 1st is 1st July additional capital introduced. So, up to July 1st, we have to calculate the interest of that amount outstanding to that date. 2 lakh rupees, this 2 lakh. 2 lakh rupees into 8 by 100, this 8%, that is 8 by 100, into 3 by 12. What's 3 by 12? That means April 1st. April 1st to April, May, June. 3 months. July 1st additional capital introduced. So, we are counting up to June. June 30th, June. Last day of the June. So, April, May, June. 3 months are there. So, 3 by 12. 12 means total month. 3 months means April, May, June. 3 months. So, calculating, we are getting rupees 4,000. Next, from July. July 1st to September. September, what happened? September means October 1st withdrawn. That means September last day of the September up to September last day. Our capital is there. How much was there? That is 2,50,000 is there. That means this 2 lakh and additional capital introduced 50,000. Up to September last day, here it is the 2,50,000 rupees is there. Okay, that 2,50,000 into 8 by 100 into 3 by 12. What's the 3 by 12? Not the same 3 by 12. This 3 by 12 is different. What's that 3 by 12? July, August, September. 3 months. July 1st started. So, we are counting from July, August, September. 3 months. So, calculating, you are getting answer rupees 5,000. You are getting answer 5,000. Calculate and check is correct or not. So, then from October to March. What's October to March? That means October you are that person, that Saloni withdrawn 30,000 rupees. Okay. So, October to the last day. That means October, November, December, January, February, March. 6 months. So, this 2,20,000. What's this 2,20,000? This 2,50,000 minus this 30,000. Okay. Up to September last day, our balance is, how much is his balance or her balance of capital account is 2,50,000. From that 2,50,000, she withdrawn 30,000 rupees. Balance how much? Balance is the 2,20,000. That 2,20,000 into 8 by 100, this 8%, and then 6 by 12. What is this? 6 by 12, then October to March. October, November, December, January, February, March. So 6 by 12. Calculate and you are getting rupees 88,800. Okay. So then what to do? That is the interest payable 17,800. That this 4,000, this 5,000, this 8,800. Total amount is how much? 17,800. This is a one method. Okay. Go to the another way. Another method. Here two method. I am discussing which method is convenient to you, which is easy to you. You can follow that one. Or any other logic with you, you can apply that logic and check. So another way, interest on capital for rupees 2 lakh for the whole year. We are introducing the capital up to 2 lakh rupees up to the last year. We are calculating last day of the accounting period. So when introducing April 1st introduced, when ending that is a March 31st. So 2 lakh into 8 by 100. We are getting 16,000. So next 50,000 for 9 months. What is 9 months? Okay, this 50,000 means we introduced the capital 50,000. What is 9 months? That means here July 1st. So July 1st to the last day of the our year period, accounting period. July, August, September, October, November, December, January, February, March. 9 months. So 9 months we are calculating. How much we are getting? That is 50,000 into 8 by 100. The same 8 by 100 and 9 by 12. 9 I counted now 9 by 12. That's 9 by 12. You are getting the answer is 3,000 rupees. Okay. Next one for withdrawal. How much we withdraw? Withdraw 30,000 rupees. That 30,000 into 8 by 100. So what is the 6 by 12? 6 by 12 is when we withdrawn that amount. I think that October 1st we withdrawn that amount. October to March count. October, November, December, January, February, March. How many months? 6 months. So 6 by 12. How much will get? 1,200. 1,200 will get. That 1,200 you have to deduct because the whole amount, the 2,50,000 we calculated for the entire period. So that is deduct this amount, withdrawn amount interest, deduct. So 16,000 plus that is 16,000, this 16,000, 3,000, this 3,000, add both and minus 1,200. You will get 17,800. This answer same, this answer also same. That means the two different methods we use, we are getting the same answer. This is for whose Saloni's calculation. So here Srishti's calculation is pending. Here you have to calculate. I am not going to help you. You have to calculate that amount if any. Calculate and refine the answer. Thank you, children.